Tessemae.
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 Tessemae was one of the most incredible food brands in the United States, maybe in the world. Talk about like 2020, some of the challenges during COVID.
We were able to navigate COVID well because we had our own manufacturing plants. And then the Ukraine-Russia war really started creating massive complexities that really started creating unbelievable amounts of chaos. We've had $4.5 million of PACA debt. PACA can come after the directors independently for the money. So we signed the purchase agreement. That business stabilized and we paid off all the PACA debt. If we hadn't have done that, that bankruptcy process would have been so horrible.
Welcome to the latest episode of High Stakes. I'm Paige Soya, managing partner of K Street Capital. And this season is all about exits. So this is our season finale, which is really exciting. And we're going to end it with a bang and a very different twist in this episode. So we've got Greg Vetter on with us today. And Greg, thank you so much for being here. Do you want to give a quick intro and then we'll talk about some of these?
Yeah, Greg Vetter, founder and CEO of Tessemae, and then founder and CEO of Alta Fresh Foods, and founder and CEO of Homegrown Brands, and now author of a book titled Undressed, the unfiltered story of my failed American dream and how it led to success.
Very cool. Well, I mean, at least in recent history, Tessemae was one of the most incredible food brands in the United States, maybe in the world. And you grew it to be, I mean, tell me if I have these numbers wrong, but it was doing like $45 million in revenue. It was probably worth $300 million at its peak. And that was a huge, huge company.
Yeah, it was actually bigger than that from a revenue perspective. We had done 70 million kind of at the end, and then we were on a run rate of going towards, that 90 to 100 range. Wow. And they valued the business at between 300 and 500 for what we thought was going to be an exit, which is why we're here. What a magnificent twist.
Oh, magnificent is the best word for that.
Yeah, it's something.
Well, this is a crazy, really a wild story, and I can't wait to get into the background of the exit, like the beginning. I'd love to, maybe if you want to just start by sharing. I know you started the company in 2009. Yeah. Grew it to what you just described, then went through some challenges during COVID. Why don't we start there and talk about like 2020, some of the challenges?
Yeah. Well, the challenges, we were just lighting the world on fire there for a little bit. And we had just done a giant advertising campaign, our first one ever. We did TV commercials and digital and radio and podcasts, and it increased our shelf sales by 40%. And the marketing agency was like, we've never seen results like this before. And we're like, oh my God. And the campaign ended at the end of February. And so the plan was we were going to take all these results to all these retailers and go, look, if you bring in all of our products, then we are going to be able to increase the shelf sales that you've seen, all the velocities by 40% plus. It's going to be magnificent. And then obviously the entire world shut down beginning of March. And so we were able to navigate COVID well because we had our own manufacturing plants, and we really prioritized our people. We bought vans, we hired drivers, nobody had to take public transportation. We brought in lunch, we brought in dinner, anything that anybody needed. And so initially we're like, wow, I mean, we've been called complete dumbasses for the past however many years for being so non-asset light. And there was a sliver of time where people were like, oh, owning your supply chain is genius. And so for, 6 months we were smart. And then that led to the supply chain crisis. So we navigated COVID really well. And then the Ukraine-Russia war really started creating massive complexities with just the supply chain in general. I think 85% of the world's sunflower oil comes out of that area. And when you look at what sunflower oil is in, potato chips and salad dressings and everything under the sun, that with everything else going on really started creating unbelievable amounts of chaos. And the chaos was happening, and our board basically was already not in alignment a little bit. And so the only agreement we could come to with the investor base and the board was to sell the business. And so we hired an investment banking group, and they went out. Well, they took forever to go to market, and now we know why. They were actually selling another salad dressing brand at the time. And oh man, and the sale did not go through. And then
this was in 2022-ish when you hired back, when you decided it was time to sell?
yes, that sounds right.
Okay.
It all blurs together after the supply chain crisis from whatever 2022 to 2024-ish or whatever. But yeah, the timing of the sale was not great. It did not go well, and everybody lawyered up, and then all hell broke loose.
So I think I really appreciate you being open and honest about the exit on here, because I feel like a lot of people don't do that, and just sharing what went wrong, what you could have done differently, like looking back at that.
Yeah.
Maybe share a little bit of that, and there's a couple things I want to ask you.
I think the timing of it was wrong. I think we forced a sale process that should not have happened in that moment.
It was really driven out of cash flow, I guess, right? That was the issue.
No. So initially it was just investor turmoil. So we had 3 different groups that all had 3 different beliefs, and everybody was very loud, and everybody had very smart, powerful attorneys, and all of our time was spent basically defending potential hostile takeover attempts and, lawsuits coming out of left field. And it really just was wearing everybody down. And then we hired professional negotiators to try and figure it out, and they were having no progress whatsoever. And so it really just came down to nobody was willing to negotiate, and the only agreement everybody could come to was, we got to get out of here. And so we got their B team, which changed our launch date of the process, and it extended it through the summer. And so they came to the point where they're like, yeah, we're going to launch, like in the middle of July. I'm like,
Worst time?
I'm not a rocket scientist,
Company?
but the last time I checked, wealthy people vacation, and you want us to launch this process in the middle of vacation season? So it did not go well.
What stage company were you guys at this point? Like, is it a Series B?
We had really just done friends and family and high net worth individuals forever. We had never partnered with a formal group until the last 20 million we raised. And even that was basically a group of high net worth individuals that acted as their own little fund, but it was, a guy and 2 of his buddies. So we had never partnered with a K Street Capital's equivalent for any of our raises.
Well, interesting to hear that, because you can have this same situation happen with institutional funds just as frequently as you do with family offices or high net worth. And but I was just curious the stage of the company at that point. But at this point, now we're into 2023 territory, right?
Mm-hmm.
And I want to back up a second, because this episode, I want to talk about the bankruptcy piece of it and the litigation piece, because I think those are interesting experiences that most people never go through and don't know anything about. I want to come back to that. But first, I want to just say, around this period, you and your brothers were I guess you were still at Tessemae.
Yeah.
Right?
Yeah.
But also you were able to start some other businesses at the same time. So maybe talk a little bit about that.
So we had a produce division that made salads for large retailers in the country. And in the sales process, our investment banking group came back and said, nobody wants the produce business. It's weighing the value down. It's complicated. People don't want to deal with short shelf life products at all. Now, we were able to get branded Tessemae's packets into every one of these salads without it being branded salads. So there were millions of branded samples to people that otherwise would never try the Tessemae's brand. And so we're looking at them and we're saying, I understand the produce component is not sexy or you don't want to participate in it, but we are giving away profitable samples to the entire United States of America. What in the hell are we talking about that you want to get rid of this division? And so then the supply chain crisis happened. And this was, again, they wanted to get rid of it before the supply chain crisis happened. Then it happened, and then that division started losing money. So then everybody started panicking. And there's a thing called PACA, which is the Produce, Agricultural, and Commodities Act, which is senior to everything in the world, right? There is no bankruptcy court on the planet. There's no bank. There is nothing. If you get a PACA claim filed against you, that government just sweeps the cash for the farmers. So we then had $4.5 million of PACA debt. And so if you don't have the funds in your account, this is the crazy thing about PACA, they can come personally to the directors. So people are losing their minds about this produce division. The supply chain crisis is happening. No produce company in the United States is doing well because no one's allowed to go, we still can't go to restaurants. So you'd have these juggernauts that are selling lettuce to Chipotle or Wendy's or whatever. You go, hey, we'll give you a $40 million produce division. All we need you to do is buy, the debt off of us and this and that. And basically we're handing them these contracts. And people are like, we're trying to keep our lights on. And so it got so heated that I just go, I'll buy it. I'll buy the division. I will assume all the PACA debt personally. I will put cash into it to stabilize it. I will assume all of the expenses and I'll do it. And they kind of kicked me off the board call and said, all right, we need to talk about this without you on. And then they call me back. They go, okay, it's yours. Put $1.5 million in, assume all the debt, take over all the payroll, take over all the expenses, and we'll sell it to you. So then we took that over and basically did a turnaround. We had to renegotiate contracts. We had to have different conversations with employees. The whole thing was completely redone, and we were able to stabilize it for a while and then get it back on track. And now it's, a profitable juggernaut, but it got very sketchy there for a long time.
I think that's important because the whole point of this episode is that the end is really not the end of this journey. And I want to come back to that. That was one of the two companies that you sort of started 2 years ago. Is that right? And the other company was based around sort of being a brands accelerator.
Yeah. And then there's also been other stuff. Like we bought half of a manufacturing business that was making all of the dressing for Tessemae's to try and save it so that we could basically shut down our manufacturing plants towards the end. I did everything I could think of to try and save it. And it's funny because all of those things are now thriving. But at the time, I didn't think about any of those things. The only thing I was thinking about was saving Tessemae's. What do I need to do to save this thing? I am willing to do anything. And with Ulta, you want to talk about a freaking gamble. This thing was losing money hand over fist, and PACA is breathing down everyone's throat. And so it was the gamble of all gambles.
What made you decide to do it, to actually buy it yourself and take on all that debt?
I knew that we weren't going to be able to sell Tessemae's if it was there, and nobody was going to buy it. We had tried. We had called a couple produce businesses. We're like, we'll basically give it to you if you just, for nothing, just assume the infrastructure and assume the PACA debt. It's doing this. You can plug it into your infrastructure. You can renegotiate the contract. You're going to be printing money. Nobody could think about anything at that point because you weren't allowed to go to a restaurant anywhere, in the country. And so again, it was this insane moment where the board is people are screaming because we're going over the fact that PACA can come after the directors independently for the money. And I was just like, I'll do it. I'll take it. I'll stabilize it. I will renegotiate everything. And yeah, I said it. I don't know if I really thought about anything again in that moment other than trying to save Tessemae. So then once they go, yeah, sure, you can take it. I was like, we better be able to renegotiate this stuff. And so we, signed the purchase agreement. And then we had some very blunt conversations with the retailers and the suppliers. And we go, this is what you're looking at. You're looking at nothing, or you're looking at us getting it back on track, paying you back over the course of the next year, but you're going to have to play ball. And everybody was good with it. I mean, they wanted just honest feedback. They wanted to know a plan. And then it was our job to execute at a very high level, which we did. That business stabilized, and we paid off all the PACA debt, and we stabilized everything, and we renegotiated contracts. And, now that business is doing really well and growing and profitable and wonderful.
In a way, it's sort of like a silver lining. Like you were doing it at the time, feeling like you were falling on your own sword almost, and just hurting your own self to help the main flagship business. But really, it was sort of it ended up thriving.
It was a total gift. I mean, you look back on it now. I look back on it now. If we hadn't have done that, that bankruptcy process would have been so horrible. If I had to rely solely on the lawyer's capacity to negotiate for payment of something, it took forever. It took forever.
Bankruptcy is already a multi-year process, right? In your case, I guess it was probably about 2 years.
It was brutal. Yeah. Yep. Final documents were actually signed on the 4th of July, this past July.
Should I say congratulations? At least that part's over.
Yeah, I don't even know. I mean, the beginning was super emotional, and then you get time to say your goodbyes and you get time to process it. And I use the analogy of it's like a loved one on hospice. Initially, you find out you're very upset, but then you have time to say your goodbyes and process all the information. And then by the end, you're just kind of like, it's time.
Is there anything that helped you in that processing stage? Because I think a lot of founders go through, or they try to skip it maybe, or they don't know how to do it, really.
I hired a performance coach, which I think was really helpful to frame things differently, because I think as a founder and a CEO for an extended period of time, you're used to processing very complex problems and dealing with a lot of horrible shit that nobody else has to deal with. And reframing that process and just doing simple exercises of writing it down. That's how this book came to fruition, was me just wanting to write the story down, not to be a book. I think that's the craziest part of me now having a book. It was to show my kids what I did and what I had to go through if they ever cared. Like, hey, Dad, how'd you do this thing? Well, here's 350 pages. Let me know when you're done. So just kind of bringing in people and looking at the process for what it is without emotion. Because for me, I wanted to blame myself. And there's a lot that will take responsibility for and accountability for. But then there was also things that were just beyond my control. We presented multiple offers to everybody to come together and move forward as a unit to maximize value for everyone. That was done multiple times over an extended period of time. And, pigs get fat, hogs get slaughtered. You look at the deals that we were giving at the time, they were magnificent for other groups. And they wanted the hog route. And unfortunately, everybody got slaughtered. And it's one of those things where you look back and you just go, I mean, maybe it was just we were destined to never, it was never supposed to work at that scale. And I just willed it to happen past its natural life cycle. And that's the outcome.
Well, that's a really interesting way to think about it too, because I do think we've invested in a lot of, and we talk to a lot of founders that get to that point where they do feel so personally responsible for the outcome that they feel like they have to push it forward, even though in reality, actually, everyone would be better off.
Yeah.
If they considered the alternative, but it's hard to do in that moment.
You can't do it in the moment. I mean, hindsight's 2020, but in the moment, everything is tied to the success of this. Your ego, your identity, shareholders, all of your greatest fears are wrapped up in this, either fears being exposed through failure or not being exposed through victory. And so you're like, I really would love a victory here, and I'm willing to do anything to make it happen. And in reality, and this is only for me specifically, I use this quote all the time, that the cave you fear to enter holds the treasure you seek, from Joseph Campbell. Not until I entered that cave did I actually have freedom, and did I actually have a deeper understanding of the journey and when it probably should have ended versus me forcing it, what fears do to you versus not, what your job is, generally speaking, as a leader of an organization, when it's time to retreat versus press on. And so many people that are founders, I mean, quit. We're never going to quit, ever. I'll take it to the end. And in reality, that tactical quit or retreat to regroup and rethink, lose the battle to win the war, I don't know if I did that properly. Now, in retrospect, it has worked out for me, Greg Vetter, and there's bigger things at play now. But the overarching public failure of this thing that I fought so hard to build and try and save, I mean, it was still very painful.
Greg, I also want to ask you, I guess in the end, now looking back at it, now that it's all been finalized very recently, you were kind of writing the book while this was happening, I guess, right?
Yeah.
Right?
Yeah.
And the book is out. Is it out now, or is it about to be?
November 25th.
That's super exciting. So the book will be out when this publishes, just a week later. And I think it's a great, to your point, I mean, we were talking about this earlier, like there aren't any books about this. There just really aren't, which is surprising, but also not surprising, because I think most people don't want to face it or talk about it or publish it.
Right. Hey guys, look at how big of a failure your father was.
But ultimately, I mean, I think that, I don't want to take your words for this piece, but ultimately, I don't think you feel like a failure anymore.
No, I
right?
don't.
And you know now that you weren't, actually, and you learned a ton from this, so much from this experience that you could apply to these other businesses that are even more successful, arguably.
Yeah, they are. I came to this quote, or I wrote it down, and now I say it all the time, but failure, like beauty, is in the eye of the beholder. And I realized that when actually DC Startup and Tech Week asked me to give the keynote, and it was failure to growth was the theme. And when you actually sit back and reflect on all of the hard stuff in the journey, that's all the stuff that makes you. That's how you figure out who you are. That's how you figure out what you're capable of. That magnificent Martin Luther King Jr. quote, "The ultimate measure of a man is not where he stands in moments of comfort and convenience, but where he stands in times of challenge and controversy." It's like, yeah, everybody's real strong when nothing bad's going on, but how do you handle the shit? And I think that's kind of the interesting part of facing the reality head on. Someone came to me, "Oh my God, I heard you exited Tessemae. You must be killing it." I'm like, "No, it was horrible." And they're like, "What do you mean it was horrible?" I saw you sold it. I'm like, "For nothing." And in that moment, that's actually when I knew I needed to write the book, because I did not want to be walking around these streets with people thinking that I made buku bucks on this thing. I'm not a pretender.
Well, I mean, I think people probably see what's public in the news, and it's like, okay, it's sold for what, 4.5 million, something like that, and you were the CEO founder, so people just imagine, oh, well, you must have gotten all that money.
I was writing checks.
Yeah, yeah.
I
In
wasn't getting
reality,
them. I wasn't getting them.
there was more in debt on the company than that, let alone, I imagine, the equity. And so I want to take one quick step back before the end of this, and then we'll wrap it up. But I just want to ask you about the litigation piece, because you and I talked about this, and I thought it was super interesting for people to hear, because not all investors get along, and there's a lot of different reasons why they don't. But looking back at that, like, or maybe just if you can, what you can share about why there was litigation, like what was causing it, over what, and is there anything you could have done differently in terms of, obviously maybe you would have picked different investors, but other than that, like the way you wrote the docs, the way that that you set up the capital structure, I don't know, anything like that that you would have changed?
Outside of not choosing to go forward with some of these people, the amazing part, and it's not actually amazing at all in the legal process, is people can sue you for whatever they want. And what I didn't realize at the time when I was young is you assume there has to be some reason, some credible reason that people can sue you. In reality, they are just suing you into submission. So you're spending all your money.
Power move, right?
Right. You're spending all your money. You're totally distracted. Your team is distracted. You have to respond. And so the next thing you know, you're spending, $300,000 a month on stuff that your only hope is that it actually gets into litigation, right? So that you can hopefully find the truth. And you're sitting there and you're like, this is bananas that this is how it goes. And it is a total power move. Okay, my lawyers are salaried. This is a part of our business model. We are going to eat this entrepreneur's lunch. And there's nothing he can do about it.
It's exactly the truth. And I'm so glad you said that, because we see this frequently, actually.
Yeah.
Investors and family offices and people that have more money, this is a tactic. It's known, It's
And
just
it
a thing.
works. When you start writing the retainer check, hey, we blew through the retainer. That's another 75 grand out of the blue. You're like, what?
So,
Yeah.
yeah, and did you actually end up in litigation, or did it go into bankruptcy and then that halted and sort of it ended in its own way?
We were in litigation for one of them. And then as we were discussing different points in these different cases, because there was 3 different suits going on from 3 different groups. Once the professional negotiators got nowhere at all, that's when we filed to restructure. But it had been going on for a long, and it's funny, you bring in these experts and they're like, take a seat, watch me work.
And then nothing.
And you're like, the only thing they want is everything. So if you're not giving them everything, this is a waste of money.
It's a shame, because you think people are going to be logical, but they're not always going to be logical. And in the end, having to restructure and go through the bankruptcy, I'm sure nobody got what they wanted, right? Nobody wins in that scenario.
Nobody won. And the craziest part was, like, at the end, there wasn't even a team left. Everybody reverted back to their independent camps and was just prepared to kill anybody that came over there. And so you were sitting there and you're like, we were smashing sales. We were a leader in a category. If everybody had just come together for a little bit longer, this would be a completely different conversation. And it really changes the way you think about leadership and teams and culture and focus and discipline and a common goal and everybody being in lockstep, because greed doesn't do it.
Yeah,
right?
exactly. And board level communications, I'm sure you learned a lot about in this process.
I'm an expert in a lot of shit I don't want to be an expert in.
Yeah, yeah. And then the crux of it, it started with this whole PACA thing. Is that what spurred some of this litigation, or was it more just people felt like they had convertible notes or something and they should have been paid and whatever?
It was the failed sales process.
Okay.
That started basically when they valued us at that kind of massive value range. And that did not produce results. Everybody goes, well, now I know how much it's worth. Let's get rid of this asshole and his team. And if we can take this whole thing over, we've put this much money in. So if we can just double or triple our money, we know the high range of the value. We don't need to get that. And then so once one group basically lawyered up, then everybody goes, all right, well, I see what they're doing. So I have to now do this too, or I'm screwed. And the next thing you know, just everybody is no longer on your team. And the whole thing just began to fall apart. It was crazy.
I cannot imagine the stress and the pressure of dealing with that for that long with that many different factions of groups.
And I still have my hair and my health.
You do, yes. A+ on that. Well, that being all this whole story. I mean, this is just the short piece of it. I can't wait to read in the book all of the details of all of this. It's absolutely fascinating. But I guess it just in the interest of the episode, and this is the finale. So this is like this is the end of our.
This is the ultimate exit.
The ultimate exit, exactly. This is the exit of the entire season.
Non-exits, right?
And so, I don't know. Maybe the next season is going to be more focused on this topic of like the end isn't the end. What are you going to do next? How are you going to process it? What did you learn from it? And what can you apply that to next? Because most founders do fail. Like, don't want to face it, but everybody fails no matter what.
Yeah.
But founders especially have to take it a lot harder, and I think that's important to recognize and be okay with.
Yes.
And hear more of those stories.
No doubt.
So, any other key takeaways or like final thoughts that you think you are worth sharing?
I think you hit the nail on the head a little bit, which is I was so scared of being a one-hit wonder and this being my only thing that if it failed, I would be nothing and have the scarlet letter of failure forever, which there will be, there is a brand somewhere on me of the Tessemae's brand. But in reality, everything that I had learned, I applied to these new ventures, and they scale dramatically faster, and they're so much more efficient, and there's so much less bullshit, and there's so much more fun. And I found freedom and peace after I entered that cave. And at the time, if you had told me that was going to happen from this epic disaster, I never, ever would have believed you, ever. And I think that's the thing with founders and entrepreneurs, that you're so thick in it, you cannot see where you can go from everything you've learned.
100%. And you also said something to me that I just want to mention because I think it's important. It's not, obviously the things you said are probably the most important things, that you walk away with it feeling happy and feeling like you processed it and you can do something else really well, but also financially. Right? I think you said, correct me if I'm wrong, but like if you had actually sold your stake at the time, what that was worth versus what you make now on the other businesses that you built, it's not even close, right?
Right. You focus on this exit and it's like, oh my God, I'm going to get, 20% of this. But in reality, the businesses that I now have give me more than that every year.
That's insane.
And that is the part where you don't know what you're capable of, and you don't understand where your journey actually is, like the chapter that you're in your own book. You think you're at the end. Maybe you're on chapter 3 of a 20 chapter book, and you don't know it because you're so vested. But yeah, I mean, the ability to now just go, okay, are we interested in this? Okay, is there a market for it? Yes. What does it look like? It looks like this. Let's come together. Let's scale it quickly. Let's do what needs to happen. And I've got 15 years of the right and the wrong under my belt. And so you can look at things completely differently. and you can reach those points that took you, 15 years to get to. And you're like, oh yeah, we're there after 12 months. you know, it's
Right.
crazy. It's crazy.
Amazing. It really is. That's why we love backing second-time founders as investors also, because we
Yeah.
really believe and embrace that, and we've seen the success of it many times. And yeah, I don't think you could have said it better. I can't, like I said, I can't wait for this book to come out so that we can read more about it and hear more about it. And thank you so much for being willing to share all of this with our entire audience.
Yeah.
I really appreciate it.
Thanks for having me on.
And that's a wrap for today's episode. Thank you so much for tuning in. And if you enjoyed it, please leave us a rating and a review. And don't forget to subscribe so you don't miss any of our future episodes. Cheers.